Hello and welcome to the video channel for Start Day Trading. The whole idea behind this video channel is to help you to become a better trader. So I hope that you'll take a look at the videos here. Whether you're looking to improve your technical analysis, you're learning how to limit your trading losses, you're just getting started by trading stocks or the Forex market, or you're a seasoned pro, these videos were built for you. So a couple of things you can do here. If you like the videos, I'd appreciate it if you give the video a thumbs up. That way I know that you like the topic and that you appreciate the content. Second thing you can do is you can subscribe to this video channel. Down below you'll see a place to do that. You can also share the videos, of course, with friends and neighbors. And then the third thing you can do is you can sign up for my private video series. These are videos that are not shown on the YouTube channel, but they are available for you and for your training. So welcome aboard, and I hope you enjoy the videos. Hello, this is Bob Joyner, and I wanted to take a look today at the S&P 500. This is S&P 500 on a daily chart. I'm recording this on Saturday, January the 25th, 2014. And one of the reasons for this recording is because a lot of market participants are kind of scared right now and wondering what's going to happen next with the market. And understandably so, because we've had this dramatic pullback for the past 2 days in which the market has really retraced a good bit. So what I want to do is look at several different indicators that I look at to help you get a sense of where the market might be headed. I'm not going to try to predict what the market's going to do, but I am going to share with you lines on the chart that I'm looking at currently, and maybe that'll help you as well gain some perspective on what's happening in the market right now and what could be happening next. So one of the things that I think is important to do is not just get too caught up, if you're swing trading, especially not to get too caught up in these fluctuations, even as dramatic as they are. And of course what happens is when the investors begin to sell and when stops begin to get hit on profitable trades, then the market just kind of falls through support after support and continues to fall down. But let's get a little bit larger perspective, and one way to do that is kind of broaden our charts out here. So I'm going to widen the charts out so that you can see this a little bit larger perspective. And so there's several different technical indicators that I use when I'm trying to analyze this move. So one of the things is to come up here and do a trend line. And if we draw a trend line, let's say back from this period back in September 2013, for example, and we can just start somewhere down in here, and we can say, well, we're trying to connect, of course, several different bottoms of candles, and that would be one possibility there. And you can see that if we do that, then we've definitely broken a trend line based on that, and that's a very bearish look. If we broaden this perspective out a little bit, then you can see a little bit of a larger trend line going on, okay? And you could actually pull this down way back into 2012. And if you did that, you would have to kind of adjust your lines a little bit, right? Okay, and you would have to adjust your lines maybe up into around in here somewhere, okay? And that's a longer term perspective. That's over a year's worth of data on the market, but you can see that overall in that perspective we are still pretty much bullish and staying within that bullish trend. So that's one thing that you could do. Another thing that you could do is and I'm using TC2000 charts here, and you could come up here and add a plot, and let's just say that we're going to add a simple moving average. And the one that I would use for a longer term trend, one of those trends at least, would be a 100. So if we add a 100 moving average here, then what we see is that we're still above that 100 moving average as well also. Another tool that you can use that I use is Ichimoku. So if we add Ichimoku Cloud to that, then I'm going to go up here and try to get rid of some of the lines to try to just focus on some essentials here. I'm going to change this Chikou, which is called the lagging span, here to this purple, so that it shows up a little bit better here. And the Kumo, in case you're not familiar with Ichimoku, Kumo means cloud, and it's a system of, I'm not going to get into all the details, but it's a system of moving averages. And you can see that if we look back on this perspective also, you can see we've been staying above this Kumo this entire time. And right now we're at a critical point, right? So let me go ahead and zero in here so we can see exactly what's going on Ichimoku. On Friday, yesterday, price closed right above the top line of the Kumo here. At the same time, this Chikou Span, or lagging span as some people call it, is right what I call poised above the historical price curve. And the way this tool works here is it's a lagging indicator back in time, sort of see, and it kind of shows us the waves of the market. So right now we are right above that historical price curve. It's very critical for Chikou to stay above that historical price curve. So what I see happening so far, just looking at these several indicators I've already put on here, we're above the 100-day moving average, simple moving average. We're above a longer trend time perspective on the market through here. If we break below here around 1775, somewhere in there, then that's going to be a definite big move lower. So that's one line to be watching. The 100-day moving average is one line to be watching. The daily Kumo, which is this cloud area right here, is an area to be watching. A definite bearish move in the market, in my opinion, is when Chikou breaks below the historical price curve, which would be back below the price candles in here, at the same time that our candles are below the daily Kumo, which means, again, we will be dropping back into this area back in here. Haven't gotten there yet. I'm not saying we're going to get there. I'm just saying that that would be an area that I would become more concerned, is a drop back in here below 1760, 1750, especially in that area. Now, the other thing we can do, also one last indicator that I'll mention, is we can go up here and we can add Fibonacci retracements. And then the question becomes, of course, well, where do we place the Fibonacci retracement? Well, one of the areas that I'm looking at right now is this pullback. The most recent, decent sized pullback that we had was back in here. And if we hover over that, we can see that pullback was in October of 2013. Now, if we use a Fibonacci retracement tool from that point, and that's just one example of where we could draw a line, and we draw that up to the recent highs that we've made, then a couple of key things here. We have broken through the 23.6% fib line, which is right in here, but we are still above what I consider the critical, and a lot of analysts consider critical, is the 38.2% fib line, which is right in here. Again, so we've got multiple areas of possible support going on right now, and we have multiple areas that I'm watching where if we break below the 38% fib line, then at the same time we're going to be below the daily Kumo, we're going to be below this longer trend line, and we're going to be possibly below the 100-day moving average, simple moving average at that point as well, and Chikou would also be below the historical price curve. So this is a really critical area right in here. If you want to mark it on your chart, 1775. So that's the area that I'm watching, and that's how I use different indicators to kind of get a sense of the market and the market direction. So this could be a pullback into a supportive trend here, and this could be a great time to actually go long, but I know that it's a little bit risky right now, and what I'm watching are these areas right in here, which we could come down and debate. After this big of a pullback, we could see a debate in this area, but again, the critical line that I'm watching is right in here, that 38% fib line, because that means so many other things, as you can see, based on these indicators. So I hope that this chart review is helpful for you this weekend as you look at the market and decide how things are going.